Vince, let's start here. This market believes we're seeing the first steps potentially towards a Fed pivot. Do you agree?
Not particularly. Central to this is the view that there'll be this immaculate disinflation. Yes, the news might have been a touch worse than expected this morning, but we believe the Fed inflation will have over the next year, and that will allow them to pivot. Inflation just doesn't come down that way.
So, Vince, which is it? Is the economy doing really well or is it not? In other words, I'm trying to parse out the equity move. Some people are accusing me of just being bearish no matter what, which maybe you can, accuse me of whatever you want. But if the economy is weakening, we have a Fed that is willing to potentially curtail that. If they continue with their rate hikes, do you think that they are going to cause a recession by design, as Jay Powell seemed to be sort of not suggesting but hinting that there was a risk?
If you believe Jay Powell that inflation is the number one concern of the Federal Reserve now, they've elevated that in the dual mandate. He woke up this morning, inflation is a problem. Inflation is still a problem. Therefore, he's got to slow aggregate demand and hope that aggregate supply fills in. The way you slow aggregate demand is tighten financial conditions. We don't have slow enough aggregate demand yet. It doesn't seem to be slowing enough in train. And we got mixed evidence that aggregate supply is filling in. So he needs tighter financial conditions.
What data is the Federal Reserve going to be looking at in their data dependency?
I think the answer is always all of it. That in particular, he brought back his stars in his press conference over on Wednesday, i.e. the Fed has basically set central guideposts, but they are only estimated, they're approximated. And a big one is inflation and inflation expectations. That's why you and your viewers should be looking forward to the University of Michigan survey. That's why they care about what's happening in bond markets right now, because that tells them what inflation compensation is. Right now, inflation's job number one. So everything that goes into the space to predict inflation is what's important. Commodity prices, inflation expectations, exchange value of the dollar.
Where do you think inflation realistically can get down to by the end of the year, Vince? What's the figure?
Not as much as the Fed hopes, and much less in 2023. I think that we'll get a modest uptick in the unemployment rate. Demand really is going to be slowing, and inflation is going to be off a percentage point and a half, or even two. Talking about the PCE index, so we're in the high fives. The Fed is forecasted not outlandish for 2022. It's going to be more persistent next year because we have so much inertia. We saw it this morning with the ECI. The ECI wasn't as much looking forward to future inflation. It was trying to catch up to past erosion to purchasing power.
Okay, so given all of that, stickier, higher inflation than the Fed realistically wants it to be, that would indicate that the Fed is not going to be able to blink even if the data deteriorates, and yet that is fully what this market expects. And Vince, you said a moment ago they need financial conditions to tighten. That's not what they've gotten in recent days. How aggressive do you expect the pushback to be over the coming weeks?
I think they're going to have to push back. To be honest, I was a little disappointed in Chair Powell on Wednesday. He seemed to be accepting of where markets were right then and there. He said essentially the summary of economic projections is still appropriate, both in terms of their forecast for the policy rate and the macro outcomes. Too optimistic on inflation. Essentially, right now, markets believe the ends to what the Fed wants, lower inflation. They don't quite have it right about what the means will be. The means will be tighter financial conditions. If you tightened 75 basis points and financial conditions are easier, something went wrong, and you're going to have to push back.
Vincent, just quickly here, from your perspective, how much would inflation have to come down for the Fed to truly pivot?
I think at that point is going to be important about the other part of the dual mandate. Where's the unemployment rate? If inflation has come down a lot, it probably means the unemployment rate is going up. As inflation gets closer to their goal, they can put more weight to their other goal, maximum employment. Unemployment rate starts rising, they will pivot. In our forecast, we think the Fed declares victory a little earlier. Remember, Paul Volcker did too. If inflation is notably lower in 2023, i.e. still in the threes, but maybe not at goal, the Fed will connect dots that says it was lower now than it was 6 months ago, then 6 months before that. We're headed in the right direction. Now's the time to worry about activity. However, you don't get the slowing of activity. You don't get that decline in inflation unless you get tighter financial conditions now.